So it's the 31st of August 2021 and summer is just about hanging in here in Finland. It's still a nice hot sunny day. So the purpose of this video really is just to explain how we got where we currently are at the moment and what could lie ahead for us in the future. So to sort of begin then, what's gone on? I think the story starts quite a long time ago, back in the 1980s, when the UK and much of Europe, Western Europe and North America deindustrialized. And that was all about globalization. Big corporations moved factories to other countries where wage costs were lower. And that then created a problem, because you don't just lose the jobs, you also lose the incomes that are needed to buy the goods in the factories that have been offshored to places like China and Eastern Europe. So for about 20, 30 years, the solution to that problem was debt. So private households used their property to borrow against, used it effectively as a cash machine, remortgaged, spent the equity on stuff, on imports. Governments also funneled demand into the economy through the welfare state. Much of that was financed not through taxation but through government borrowing. So you had this massive build-up of debt, and of course companies did the same. They also borrowed heavily. So you've got a big pile-up of private debt, household and corporate, and then you also had a build-up of government, what's called public sector debt. So in 2008 we hit like a debt saturation point. Households struggle to pay the debts that they already have, because the thing is that if you borrow to consume, that won't increase your income in the long run, but it will increase your debt, and therefore the amount of money that you have to spend on debt interest every month. So if you repeat this cycle of borrowing and spending, what happens is that your expenditure on debt interest goes up and up and up, but your income largely stays the same. And you'll get to a point where households can't pay the interest that they owe on their massive debts from their incomes that have been flatlining, or actually falling in real terms once you take inflation into account. Okay, so we had the crisis of 2008, which was all about households not being able to pay their mortgages, and this created the global financial crisis. So the solution to that crisis was to cut interest rates. That bought some time, because if you cut interest rates, zombie households can struggle on. They can, the big pile of debt that they've got suddenly becomes a little bit more manageable if you cut interest rates. So we then embarked on another round of borrowing and spending, borrowing to purchase imports. And by 2020 there were signs again that households were struggling. The retail sector was contracting. Big chains were closing like Debenhams. Restaurant chains like Jamie's Italian were going bust. The high street was suffering even before this current crisis that we're in now, which for me indicates a lack of disposable income, which is a product of rising debt and too much of household income being spent on debt interest. Now, obviously a big one is mortgage debt, especially for the UK. Okay, so what can't be repaid won't be repaid. So the people that run Western Europe and North America kind of understand this. There's only two ways out of a debt crisis. One way is to just default on it, but that would cause a massive crisis. The other way is to inflate, so just print the currency and distribute it to households, and that's basically what's been happening since March 2020. The problem with that is it causes inflation and eventually currency collapse. Your currency becomes worthless. So what that will mean in the not too distant future is that we'll need a new currency, and that new currency will probably be a digital currency issued by central banks. And I'll talk about that another time, I think. So what's with these central bank digital currencies? Well, as you know, at the moment we've got a fiat currency system. That's money that's backed up by nothing really, apart from people's confidence in it. We accept paper money, not because it's backed by gold or silver or land or anything like that. We use it because we have confidence in other people accepting it as a means of exchange. And obviously, inflation can compromise fiat money's ability to act as an acceptable means of exchange. And that's basically where we're heading to because of this excessive money printing. Eventually, it will cause a very, very sharp inflation. So, plans are already underway by the Bank of England, the European Central Bank, the Federal Reserve over in America to introduce a central bank digital currency using a blockchain technology similar to Bitcoin. So that will mean the end of physical cash. Now, there are some implications of that. The main one being that you won't be able to take your money out of the bank again in a system where there's digital money only. So that'll mean that central bankers will have the opportunity to impose negative interest rates on people. So what that might mean is that you might start the year with £100 in the bank and end the year with £95. So rather than the bank paying you interest, you pay the bank interest. That's what a negative nominal interest rate would mean. So that system isn't possible at the moment with physical cash because you could just go to the bank and take your cash out. With digital central bank digital currency, obviously you wouldn't be able to go to the bank and remove physical cash because there wouldn't be any physical cash to remove from the bank. Other implications of it are even more important, such as complete control by central banks. So, for example, even in terms of healthy eating advice wouldn't be needed anymore. You could introduce a system whereby people's spending would be tightly regulated. So for the good of society and to save the NHS, you could have a programmable central bank digital currency whereby you're only allowed to buy so much meat per month or so much fizzy drinks or crisps, or maybe you get a less negative nominal interest rate if you adopt a vegan diet, and the government would be able to know what you're spending your money on in a central bank digital currency system, because every single pound of your spending would be tracked by the central bank. Similarly, if you did something such as criticise the government on social media, again, maybe the government could impose a higher rate of tax on you. Or if you choose to borrow money, you might have to pay a higher interest rate because you're not a good citizen. So there's all sorts of concerns that certainly I have about central bank digital currencies, just giving central bankers and governments way too much power over you. Again, at its most extreme, the government, should it choose to pursue tyranny, but you wouldn't even need to build concentration camps or gulags. You could just cut people off from their access to their digital cash at just a computer keystroke. You'd go to buy your groceries at a local shop and your transaction would be declined by the central bank because your social credit score isn't up to scratch. This system already exists in China. It's not a conspiracy theory. It already exists. Now, the other thing as well is, what could we do to stop this system? Well, to implement central bank digital currency, you'd obviously need to have everybody signed up to a digital ID. So from the central banker's point of view, it's very fortunate that COVID's come along, and as a solution apparently to COVID, we're all going to have these digital vaccine passports, which really are certificates of digital identity, which could easily be incorporated into a central bank digital currency. So what can we do to kind of fight back against this? I guess is to keep on using cash and to resist any form of medical apartheid. Because without the certificates of vaccinated identity, they won't be able to roll out central bank digital currencies. Hopefully you won't think that this is conspiratorial, because these things are already happening. It's difficult to be conspiratorial about things that have already happened. Okay, that's it.